Hey, welcome back, everybody, to the Financial Advisors Workshop. And this is the show where we interview some of the top financial advisors across the country, how they run their business, how they do what they do for good serving good Americans in their financial lives. And that's a service that we certainly need. And we find some great people. Today we have Rhys Williams. And boy, there's a lot of really interesting stories about Rhys. So Rhys, welcome. Welcome to the Financial Advisor Workshop.
Thanks for having me. I'm looking forward to it.
Excellent. Well, so you are one of the leaders of an interesting firm that has multiracial program with advisors. You also are connected to Duke University. You also are a Russian translator. I mean, there's so many interesting stories. Where do we begin?
Wherever you would like to. Where you tell me how you want to go.
Well, good. Well, tell us about your firm, and then we'll do a little bit on your background after that. In general about your.
Sure. So Wave Capital was started early this year, so we're very new, and it's two Duke University grads, both in their mid-30s. One of them became a lawyer, and then he was the general counsel at MailChimp, which got sold to Intuit. He's at Intuit now, in charge of tech partnerships. But he had a very interesting business being part of what I think they called it Value Investment Group, which is basically influencer-backed venture capital. And what they did was use some of the celebrities that you call Atlanta home to get in some of the some of the best pre-IPO deals of the last big generation of IPOs. So I'm talking about like Airbnb and Lyft and Instacart, and which was really probably a vintage of about 7 or 8 years ago. Because when you think about it, the 2020, 2021 boom was kind of a lot of SPACs and a lot of, there wasn't as many traditional IPOs during that particular time. So anyway, in that last big generation, he was successful. The firm that he was at was successful in marrying, some of these Atlanta celebrities. And so we're hoping potentially do the same thing at Wave Capital.
Nice.
One guy. The second one is a guy named Abram Kermah. He's our CEO, and he also head of sales. He was an industrial broker at CBRE in the Mid Atlantic office. So had a real good exposure. Knows a lot of people at the Amazons and the WalMarts of the world, and has a good sales background. He was also a pro football player after Duke, so he has that little cachet going for him. And part of what we want to bring to Wave Capital actually is the ability to serve as athletes and entertainers. And because a lot of 30-somethings, even if they make a lot of money, don't necessarily invest, don't necessarily save very much money. Really, we'd like to be there as part of their education effort because we want to make sure that people not only make a lot of money, but actually try to save some of it to prepare for, the long term. And we all know in the investment business, you need to save early and you need to save regularly. And I think that's kind of the mission we're trying to get to some of these, athletes and entertainers.
Exactly. And it's interesting that you point out that they really don't do any planning unless it's cool and they're in a different set of life than most people. So they don't really listen to financial advisors unless there's some connection there.
Right. And that's the hope that obviously, do they really care what I think? Probably not. But hope that, they do have that bonding and that relationship with the younger guys at my firm. And so hopefully that combination of kind of old and young and wisdom and having done it for a few years, it is helpful.
So give us a little more now on your background. How did you get to Wave Capital? You were not in this business initially. You were in different businesses alongside. So how did that all translate over to where you are?
Okay. So I was originally I was a sell side broker, institutional salesman for Prudential Securities. I covered, that was a top 5 or 6 firm at one point, with Prudential Insurance behind it. And we covered the Mid Atlantic. So I had some really great accounts like T. Rowe Price, et cetera. Learned a lot from those guys. Got in the business in August of '87. And then I left in, I believe, 1996 to join one of my smaller clients called Columbia Partners, where I took a small cap fund from like 50 million to almost 2 billion at its peak. And we sold that firm in 2017, I believe now. And I felt like at that point I was too young to retire. So I basically took some friends and family money and went to a place called Spouting Rock, where I was chief strategist. And that's probably how you came across me, because I did post a lot on LinkedIn because I had the opportunity to go on, the CNBCs and the Bloombergs and the Wall Street Journals, et cetera, of the world. So I got a lot of, kind of media attention as we talked about, cheap strategic things in the market and
Yes.
allocation, valuation, that kind of thing. So, when Spouting Rock, actually, I thought with this new opportunity with these two younger guys from Duke, that we had a kind of a better opportunity going out by ourselves. And I left Spouting Rock, and I guess the end of last year, 2023, and then we boarded this firm over, and we started it with basically some friends and family money that I managed throughout this entire time.
Excellent. And you have an international economics degree from Hopkins.
Yes.
So tell us about that.
Well, I was going to do a PhD, but I decided I like math, but I didn't love math. So I got out after the master's. Because even then, economics is pretty math. Is a lot of math. I went because I really thought it was an interesting place to learn about how the world works, and especially international trade theory, international monetary theory. Trade used to be a good thing. Now it's a bad thing. But I think we can all agree, actually, from an economic point of view, it's a good thing. So it was just really helpful in kind of understanding how global capital works and how these great monetary movements work. So it was, I think, a very good background for then going into the micro of stock analysis and stock picking. I did a CFA also along the way, and it was great because when I was at basically my accountant started giving me money of people that she knew, and that's really how I started managing other people's money for probably like 1991 or so. So I've been doing this for a very, very long time.
For a long time. Great. And then you also speak Russian, and you were a translator as well. Tell us about that.
So when Reagan was staffing up for the Cold War, as you may remember, the last time we were in a Cold War, and this is before Gorbachev, right? Gorbachev came in 1985, and so there were no Russian immigrants. You couldn't get out of Russia as the Soviet Union, as you may recall. So that's why there was a big interest in Russian language. I was able to get hired by the Times of London in their London bureau, in their Moscow bureau. And basically, I don't want to overstate my journalistic crescendo here, because most of the articles were written by a couple of very good 40-something journalists. But I was there to speak the language, read the newspapers, and I could do some slice of life things. So like when there's underground rock concerts and things like that, it was fun. It was enjoyable. I really very much had Evan Gerasevich's job, the one that was unfortunately in jail from the Wall Street Journal. That's exactly what I did.
Fascinating. Wow. So then you progress from there for institutional, and then you come into the private client division, and you work with Columbia Partners, and then you bring these folks over. So then you start your own firm with this new team, the Duke University crew. And that just happened in April, right?
We really just got going. Yeah. It took a while to, port everybody over, and, getting started is always a little bit of a challenge. So, and so we were able to, to do that, but beginning basically in April. And like I said, the whole point is we're going to use sort of mostly my clients as kind of the stable longer term. And then why we try to kind of pivot and go, younger and maybe more diverse with these hopefully these newer clients. And we think that's very much of an underserved market. I think there's 1 million registered investment advisors all looking for that boomer between 50 and 70 with lots of money. And we like those people too, but I think for sauce, it will be people that can talk to somebody who's 30 something.
That's right. Well, good. Well, so, okay, your team is in place, your assets have moved over, and said, how are you running the firm? Now that you've had all this other experience, what are you doing, and what are you doing maybe differently than the other place?
Okay. Well, I mean, we've got a two-pronged strategy. We are still trying to grow institutionally, even though, institutional growth is hard. But I do have a 5-year track record. And so we're getting in databases, having meetings with, major allocators in the hope to try to get, bootstrapped and get some traction. And we are a diverse firm, so there are some pockets of money that are kind of reserved for that area. And I can tell you personally, it's very hard starting a firm. So I know how hard it is for anybody to start a firm, but I think it's probably especially hard for for a diverse firm to get started. So
Yes.
so we're having some meetings with the idea that hopefully we can get some institutional money as well in some of our institutional products. So we have two-pronged strategy. One is to try to grow institutionally, but also why we're growing institutionally to try to do the high net worth business along the way, where we can tailor an investment allocation to a particular client's needs and risk tolerance.
Mhm. So what kinds of different things are you doing then? You're doing some really unique portfolios as a result of it.
Correct. Well, so we have two standard portfolios that are two strategies: all cap and SMID core. And all cap is really a large cap with a few small cap stocks, what we call our farm team, with the idea that some of these farm team may hopefully will go up 2 to 5 times over a period of years. But it gives you that sort of potential optionality, while the bulk of it is very traditional larger cap names that you and I know well. We also have a SMID core product because it is easier growing institutionally, especially in SMID, because it's less indexable. It's people are very comfy in the S&P 500 index fund. So we're trying to do it that way. But as I said, when clients come to us, we don't necessarily push them into one of our products. We offer it, but we can also do a bespoke allocation based on their needs.
Great. So the unique portfolios that you run, do you layer on other asset classes like safe bucket things like bonds and maybe structured notes? Do you work with alternatives? Tell us about all that.
Yes, we do have we do have some potential alternatives, and we also have bonds that we can use, and we can both do a laddered bond, individual bond, or ETFs. But our preference on the kind of the non-specific equity portfolios that we run is to probably go the ETF route. We just think that's very scalable, and also we want to some of our clients, especially our newer ones, are young, and frankly, I'm not going to be here. They're going to be here a lot longer than I'm going to be here.
Right.
So we want to make sure that they're in portfolios that are not only good for this year and next year and 5 years from now and hopefully 10 years from now, but also 20 and 30. So that's part of that strategy.
Nice. Good. And then what does the future look like for your organization now that you're kind of stable and you're settled? You're starting to adopt the strategy. Are there any things that need to pivot going forward from your 6 months or so, 7 months in operation? Anything that's become evident yet?
You know what? That we have some interesting irons in the fire, and kind of depending on what hits is kind of where we're going to feed the growth in the firm and probably really focus on that. So we're at that, we got stability right now, but we to get sort of a hockey stick and to turn 143 million into $1 billion in assets, we're going to need we're going to need some irons to get hot. And so I think we have some potential things going on right now. And then we'll need to staff up for that if some of these opportunities come up.
And how did your previous firm get to 5 billion? And then is there anything you could learn from that as far as your strategy?
That was an institutional firm, so it's quite different. We really were not an individual firm. We were mostly Taft-Hartley.
Oh, okay. So that is a totally different business, right?
Yeah.
So
yeah.
now
Great business, no, but different business.
So now you're in the private client business and you have the new partners and everything. What do you find about the private client business, comparing it to the institutional? What do you think about it? Is it better? Do you like it more?
You know, I think if you look at it on a business level, it's definitely a better business because it's not as chunky. We've seen the institutional firms, pure institutional firms in the Mid Atlantic. Many of them have just gone to zero. Right, you have a couple bad years, and consultants pull their money, and you're done. So I think the private client side is a little bit more relationship based, and you're trying to solve a need, and it's not whether you pick the best tech stock that minute. On the institutional side, frankly, it is. It's pretty much all. So and performance relative to a benchmark.
Right.
So I think the private client business is a lot better business, and that's one that we are emphasizing. However, I do have a history of institutional, and we have noticed that, like I said, it's really hard to start a firm, and not that many people are doing it. So if we can get any traction, we could really run the table as a diverse firm in the institutional area, because as I said, it's really hard. So we think there might be a little bit of scarcity value if we can get some traction. So we're not totally all private client, but I think the private client is just feet on the street, pounding and giving people good service and trying to take care of them. And the institutional side is probably what I would call some shots, some long shots. But if it takes off, we could really have a huge firm.
Yeah. Well, and how is it like working with new younger partners as a senior person with lots of experience?
Yeah, I think we fill each other's needs well. Meaning, obviously there's some things that I can bring to the table, but there's a lot of things that they bring to the table that I don't know anything about.
Sure.
And especially if you're talking about a stock, I mean, there's things that 30-something people know that 60-something people don't. And so it's very helpful that any type of fashion trend or things like that they're just much more attuned to what's going on than I am. So I think it's that smorgasbord of ideas and opinions, and which is super helpful.
Well, good. And you're the senior guy, senior in age and experience. What do you think about the markets here? I mean, it's a strange market, and how does it relate to the new guys who don't know it that well?
Yeah. Well, it's always interesting. There's always something to think about. There's always something to worry about. I think, if you look at it on a piece of paper and you go, wow, we've got a market here, 22 times earnings, with a lot of things that could potentially go wrong geopolitically, which are not like, black swans. They're like out there in the front pages every day, right? I mean, it's the Middle East, it's Ukraine, it's Taiwan. And I would think nothing going wrong in any of those areas could remotely be labeled a black swan. So we have a market that's willing to look through a lot right now geopolitically that perhaps they wouldn't have 10 or 15 years ago. Though potentially it's also, hey, every time the market goes down, it comes right back, right? And that's been true since 2008. So a whole generation has been trained that markets don't stay down. In fact, they don't stay down very long at all. Right. At some point, they're going to be wrong, and we're going to have 10 years of a flat market, just as we did in 2000 to 2010. But so many people that were investing during that time and that sold and said they never came back, right? So I think that either the people that sort of had invested from before that time and had good results, so they kept with it, or people started new, and obviously a lot of people have started new since 2008, given we're in 2024. I think that's the sweet spot for investors right now. But as to, we spent some time thinking about, tech and the various sectors and things like that. And I'm not going to mention individual names, even though individual names is what we do. But we do think the reason why the U.S. market is so much more highly valued than others is because you have some dominant tech companies that arguably maybe the greatest companies in the history of capitalism. I mean, who would have ever thought that companies of the scale of some of these big tech companies could grow revenues at 20%, 15 to 20% off enormous bases year in and year out with great margins? I mean, you look at it, I mean, and I'm just giving this an example. Apple is sort of like the today's equivalent of Kellogg's cornflakes, only and Kellogg's cornflakes grows at 2, 3, 4% a year on a good year. This is the top line, and then does some things on the margin to maybe grow margins, and maybe they do 7 or 8%. Well,
Sure.
big tech companies are growing, not necessarily Apple. That's a bad example, but the other big tech companies are growing, 15% top line, 20% bottom line. I mean, it's quite something. And I think that's the difference between the U.S. and the European and the Asian markets is nobody else has these big companies that are putting up these kind of numbers. And that's what makes the U.S. market so much more dynamic, I think. I don't think our banks are that much better than the European banks, or our insurance companies are that much better than the insurance companies. And I think that's one of the big things that's one of the big things that separates our markets. The other thing I've noticed is, of course, a lot of advisors want everybody to diversify into other markets because they say it's cheaper. And my point is, international markets have been cheaper and looking cheap for most of my career, certainly for the last 15 years.
Yes.
And year in and year out, something goes wrong. And so I think the problem with that theory is when the U.S. does catch a cold, other places get a pneumonia because we're an important trading partner.
Right.
I think that's why it never sort of works as a diversification. So when the U.S. market does go down, other markets go down pretty hard too, because we have become sort of one world. I think, when international investing really worked well was sort of the pre-free trade agreements of the early 90s. And so in the 50s and 60s and 70s, when, some things were really going on in Japan or someplace like that was kind of unique to Japan. So anyway, I get off my soapbox, but I think that, the bulk of a person's money if they're United States, U.S. Citizens, ought to be in the United States, because I still think it's the most dynamic. They're the most dynamic companies, and it's the most dynamic market.
Do you think the election is a big risk for investors?
Well, half the people are going to be disappointed for sure, because I think investors are actually, obviously, Trump is not your typical Republican. So, ordinarily I would say, well, the investor class wants Republican. I would think actually that's probably not true. I bet you there are more people that own stocks that will vote for Harris than vote for Trump. Maybe not because of their tax policies, but for other reasons. So I don't know if there's going to be I know what happened, obviously, the last time Trump won, but remember that market was selling off. We were clearly sort of gliding into a recession. It was sort of weak in front of that, and then, of course, the Trump rally, that really started on the night of the election.
Yes.
So, but I think I'm not sure the same thing will happen, because obviously the markets have been a lot stronger in front of this one. So I wouldn't anticipate on a Trump victory the market takes off. But I also think that clearly whatever people's problems were with Biden's policies, especially on some of the sort of aggressive social policies that he's put in place, and spending, the market has done pretty well during the Biden administration. So nobody could complain about the returns of the S&P 500 in the last 4 years.
That's true. Well, great. Well, you clearly have lots of experience, and we learn from your experiences, and we appreciate that. So we're coming to the end of our discussion here today, and you've had great success. Now you got a new venture with new partners, and I'm sure you'll be a success again, and you're learning new ways to do things. Can you share with our financial advisor crowd, primarily financial advisor crowd, what would be some of the most important things or thing that you need to do to be a success in this business for all your experience?
I think, having empathy for the client is probably the most important thing. And then, curiosity. I think, and every time you think you've figured it all out, you can be humbled in this business. So I think having continual curiosity as to, you know, what you don't know that you can learn, I think is super important. And I think, frankly, that's one of the great things about being with young people is they force you to look at, at things in a new way. And it's a gift for me personally.
That's a great message. Stay fresh. Never think you know it all, because when you do, you'll be surprised.
I've been surprised many times.
That's wonderful. Oh, Rhys, thank you so much. Really appreciate your being with us here today. And we'll check in with you later on to get more information on what's going on with your firm. Sounds like
Thank you.
Exciting venture.
Yeah, and I would like to hear more about 4-Star and about maybe how we could work together.
That sounds
I'd be very excited to. Thank you.
excellent. Well, thank you. So we'll leave it there, everybody. So thanks everybody for being with us today in the Financial Advisors Workshop. And we'll be back again with another interview very soon with another one of our great financial advisors we can all learn from. And that's it for today, folks. Over and out. And we'll see you then.